Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for June 29th, 2024. Actually, it's for June 30th, but I'm filming on the 29th. Anyway, happy weekend. I hope you guys are great, and we got a big week coming up next week. Yes, we are looking for fireworks for the 4th of July holiday. Yeah, it's a little bit of a joke. But anyway, it's probably going to be very busy this next week, and it is a shortened week, and it's a holiday week in the U.S., so there is going to be a lot happening. So we got to go through all of it. But first, I want to say a couple of things. If you took the survey in Forex Analytics and you qualify for the $25,000 Trader Funding Program assessment, we're going to do that drawing here in the next couple of weeks. So stand by, and thank you very much for your surveys and participating in that. We got a lot of great information on how you're viewing the community and things that we can improve, things that you love, and so we just appreciate all the feedback. There's so much to comb through, and thank you all very much. Now, speaking of Trader Funding Program, I'm going to tell you what, there is a special for the month of July. So I want you guys to hear this really quick. For the month of July, for anyone who takes a Trader Funding Program assessment, you will get a one-on-one session with me for 45 minutes. Each and every one of you that takes a Trader Funding Program assessment will get a one-on-one session with me. Now, I've done a couple of these with a few of our traders through the assessment, and what we found is it's very valuable because this way you can understand what the assessment is all about, what to expect, maybe some tips and tricks on how to build your account. But more importantly, you're going to be able to see the tools that are available to you as a trader. And you remember, you have unlimited time to pass an assessment. And you'll get Forex Analytics for a period of time, and that's based on what size assessment you take. But when you take an assessment, I want to be able to share with you what I've learned about passing assessments, and I want to teach you what I've learned about what some of the techniques that I used as well. But more importantly, is just showing you what tools are available to you. It surprised me to know that so many people that take the Trader Funding Program, they don't know that they have access to chat rooms where they can have access. You can have access to me or other analysts in the Forex Analytics community. That they didn't know that they have the ability to utilize Forex Analytics and attend live shows that are exclusive to just them inside of a community. And you can hear my voice, and you can talk to me and ask me questions throughout the course of the trading day. There are so many great tools available to you when you're inside the Trader Funding Program. I want to make sure you know exactly what's available to you and how you can leverage, having access to myself and other members from the Forex Analytics community. So make sure you take advantage of it this month of July. In the month of July, if you take any assessment with Trader Funding Program, you will get a 45-minute session with me. So once you sign up, support will forward over your information to me. I will email you directly, and we will set up a one-on-one session sometime throughout the course of the month of July. So take advantage of that. I'm not going to do that forever, but I think it's very valuable to you that want to, access larger amounts of capital. Maybe you don't have capital available to you. How do you get to it? Well, through the Trader Funding Program, all right? And this way you don't have to, don't have to put all your money at risk. All right, anyway, moving right along. That is a really exciting thing that I'm looking forward to meeting a lot of you over the course of the month of July because we want you to succeed. We want you to know where all the tools are at. We want you to be able to talk to me or other analysts in the Forex Analytics community. So get involved. All right, let's talk about this week. It's going to be a busy one. Obviously, on Sunday night, we have the French parliamentary elections. We have the UK parliamentary elections this week. We have a 4th of July holiday, and we have Canadian and US jobs report on Friday. What a crazy week, especially with low liquidity on Friday. So that's going to be something that's going to be, off the charts, I'm sure. So what's the best way for you to take advantage of that? Well, be in the trader funding program, of course, because then you can take advantage of the volatility that's obviously coming this week. So let's talk about Sunday evening. So on Sunday evening, we will have the French parliamentary elections, and you know what the market's most fearful of. And I'm gonna delete this, and we're gonna obviously be talking. We're gonna be talking about the euro quite a bit. These are our drawings from last week. If you guys don't know this already, I keep the drawings here from the week before, so you can see exactly what we talked about. And didn't want to do that. Let's delete these. I'm deleting these green squiggly lines. Okay. So what you see is the euro stalled ahead of key support. We all know that's key support. We all know it's 106.65. And whether we gap below that level on Monday morning or Sunday night, it probably has more to do with the French elections. Now, remember, this is only the first round. So I would think that downside might be fairly limited. So if we do break lower, you know, how much lower are we going to go? Maybe 106, maybe 105. You know, this is obviously, and I'm going to just point out, Mr. Captain Obvious right now. This is all very critical support. So any breakdown I feel is going to be fairly limited. I don't necessarily think that we're going to gap lower, but it depends on how big, how big the far left coalition is. You know, if there's a majority, if there's a coalition, excuse me. So that's all going to, depend on how the euro reacts. If there isn't a far left majority or some sort of coalition, the euro might actually end up gapping back up towards the 50 DMA. I think any move back up towards 108 is going to find resistance. So, and I didn't want to move that. I'm trying to grab this little red square here, which might be a little bit more difficult than I thought. Okay, there we go. So what I'm trying to point out here is that any move back up towards 108 or the 50 DMA is probably going to find, sellers. And remember, because it is only the first round, so things can obviously change between, now and the next round of parliamentary elections too. Then any breakdown I think would be fairly limited, but we'll see. We're going to see how the credit markets respond on Monday morning when fixed income in the in Europe start trading. All right. Also, what's happening on Sunday is you got the China PMIs. Now, one of the currencies that I think everybody's watching right now is the US dollar CNH, and I'm going to just go ahead and talk about it here. Is that it's been slowly and silently breaking out to the upside, and this is something that you got to watch, because if there's going to be further dollar weakness, it might show up here in the US dollar CNH first. And I know my colleague Ryan Littlestone, he's been all over this, looking at it every day, talking about it. He blogged about it on the Forex Analytics blog site. If you haven't been there and seen his post on the US dollar CNH, which should be right about here. And he was talking about how the PBOC might be, allowing some weakness come into the US dollar CNH to help bolster the Chinese economy. Just keep an eye on it. I think that's something that we need to pay really close attention to, especially if you see the dollar breaking out across the board. Watch to see the CNH. I don't trade it, but I know some of you do, and have that ability. So just keep an eye on it. All right. Next, what's going on? Monday, we have ISM data in the U.S. Now, remember, it's a jobs report week. So we're going to see the ISM manufacturing data this week. We are not, and let me find the dollar index really quick. We are not going to get the ISM services data this week. We'll get that next week. But take a look at the dollar index as we creep up towards that resistance. Now, I don't think it's the ISM that's going to break us out. I think if we break out, it's because of what happened in France in the parliamentary elections over the weekend. But what could carry us even further is if the ISM data is really strong. So I think the inflection point here is 106.25. That's the 88% retracement. It's the last Fibonacci level that bears are hoping holds. If that breaks, there could be a very big breakout. And if that happens, the ISM might be a catalyst for a continuation higher up towards the 107, 108 level in the dollar index. So just keep an eye on that. It's going to be a busy week with U.S. data, obviously, this week. Now, on Monday morning, we have Lagarde speaking, and Christine Lagarde, she's speaking at ECB forum. And that's going to be fairly important, especially that it's a forum that's happening for I think Monday, Tuesday, and maybe Wednesday as well, because Powell's going to be speaking on Tuesday. But with Christine Lagarde, depending on what's happening in France and with the French and German boons and what's happening in the 10-year, and if that those spreads are blowing out, the ECB, or excuse me, she might actually have to say something to try to calm the markets. I don't think that's going to be the situation, but that's why it's going to be really important to hear, because she's going to be addressing that if it seems like it's going to be an issue this next week. So keep in mind, she's going to be speaking on Monday morning. Okay, Monday night, or Tuesday morning if you live in Australia, you got the Aussie. The Aussie's been holding up really well. We had strong CPI data that has kept the Aussie buoyant. We're above the 50 DMA. There's been a couple of comments that have come out of the RBA that's a little would have bulls kind of pause, but we're up against key resistance. I think I've mentioned it every single week for the last several weeks. Now, speaking of which, if you like this analysis and you believe that this analysis helps you get through your next week or get prepared for the next week, give us a thumbs up and tell the team thank you down below in the comments. I'm filming. It's Saturday morning. I'm missing a little bit of the first football match. I'm going to be watching England play here in just a few minutes. But I'm setting aside some time to film this to make sure you're prepared for the next week. So if you appreciate that, make sure you give us a thumbs up, comment down below, especially if there's something that I might have missed, and compliment our team for getting this information out to you as soon as possibly can, so you can be prepared for this next week. Okay, going back to what the Aussie is doing. Again, we're coming up against key resistance. I'll be talking about the Aussie a little bit later, so just stand by. But you can see we're right up against the 67.15, which is key. Support is going to be the 50 DMA and that 38% retracement at 65.82. All very key levels. You obviously need to be keeping an eye on copper. But we have the RBA meeting minutes on Monday night or Tuesday morning. And actually on Wednesday morning in Australia, we have Australian retail sales. So keep that in mind as well. All right, Tuesday, we're going to have Eurozone CPI. Jay Powell, he'll be speaking. FOMC Powell, he'll be speaking at the ECB forum. We have the JOLTS data. And then we have Mexican PMIs. And I want to talk about the US dollar Mexican peso, because I was talking last week how important it would be to hold 17.95, which it did hold. So I know many of you picked up the dollar Mexican peso last week as we, touched 17.95 and 17.90. Congratulations to you that have done it. I think that was it's been an awesome way to play it to the long side. We got through Banxico last week. They didn't give us a surprise interest rate cut, but that doesn't mean that the dollar Mexican peso still isn't setting the pace to trade up, above 19 in the near future. And the reason why I say that, you guys all know this, but I'm going to say it again. We've had a very minor pullback to the 38% retracement. Because we've only pulled back to the 38% retracement, the risk is now building for a continuation higher. And really, one of the things that the dollar Mexican peso is really waiting for, yes, the new government to come in, but even more so than that is stocks continue to stay very well elevated. And while they're elevated, carry traders aren't worried about closing out their carry trades. And I want to, matter of fact, let me pull this up really fast. I'm gonna grab it from a different chart. Just stand by really quick, guys. I am going to pull up a chart of the Mexican peso CFTC data. You just got to give me a second to get to it. Here it is. It's going to be right here. I want to show you this chart really quick. This is the CFTC data for the Mexican peso. And let's just take a real quick look and understand how hedge funds are still aggressively long. That move that you saw in the dollar mex, this move higher, that was, in my opinion, supposed to force a lot of carry traders out. You should have seen this green line right here dip a lot further, but it didn't. This move right here should have really shaken the trees of some of the, this move right here should have really shaken the trees of the dollar Mexican peso longs. And it really didn't. They may have, pulled back a little bit, but you can see there's a long way to get back to break even or to normal positioning. That means that if stocks actually do come down, this dollar Mexican peso is really primed, especially from a technical perspective, to go higher. But again, we just need some cooperation with stocks. If stocks start moving lower, the dollar Mexican peso would be primed for a short squeeze. All right, continuing on. Like I said, Tuesday night, Australian retail sales, already mentioned that, which would be Wednesday morning in Australia. But Wednesday morning in the US, we have ADP, unemployment claims, which obviously the market's watching. And everything's been moved up because the 4th of July holiday is on Thursday. So remember, things are going to get very, very quiet probably after that data, even with the FOMC meeting minutes being released Wednesday afternoon. There's going to be a lot of people leaving on Wednesday to get to their location that they want to be celebrating the 4th of July holiday on Thursday. So I believe that after the U.S. data comes out, things are going to get fairly quiet. Christine Lagarde will also be commenting and giving her closing comments at the ECB forum also on Wednesday morning. So Thursday, it's going to be the 4th of July, but we also have, because obviously we're celebrating 4th of July here in the U.S., but in Switzerland, they are not. And if you live in Switzerland, you're going to be watching the CPI data. So we've looked at the dollar Swiss, and one of the reasons why we didn't get all the way back down here was the Swiss National Bank surprised the market with an interest rate cut, right? A surprise cut. So could this still be a big inverted head and shoulder pattern? I guess maybe not. What I was hoping for, and you guys might recall from a couple of weeks ago, I didn't think that the Swiss National Bank was going to give us a surprise cut. And I was hoping that they wouldn't, so we would have slipped even further. But what we're doing right now is we are pushing really key resistance at 90 cents. Now, if that Swiss, now remember, this is 4th of July, this is Thursday. If that Swiss CPI data is weak, then there's risk that the US dollar Swiss franc could trade back up to above this 50 DMA right here and back up towards 92 cents. So keep that in mind. I mean, one of the reasons why the Swiss National Bank felt comfortable for giving us a surprise cut, one of the reasons why is because they don't feel that inflation is much of an issue for Switzerland. So Swiss CPI is going to be a big deal. You know who else isn't celebrating the 4th of July but should be? Is the UK. Because in the UK you have a parliamentary election, and this is that the whole Sunak looks like it's going to be a Labour landslide win. And I've heard a lot of different opinions on where people think Sterling's going to go, but I'll tell you this much, and just keep in mind before I delete all these green squiggly lines, what happened here last week was really important because we were looking for a short in Sterling up around 126.80. So if some of you took advantage of that, congratulations. But more importantly, we have these UK parliamentary elections, and we're going to see what happens with Labour. And I think the market is really looking for, this Labour landslide win. Will they eventually have a supermajority? What's it going to look like for the UK moving forward? And I think there's a lot of positivity built around that, which means that we have to start looking at the Sterling as, this pullback has been very minor. Like if you think about like a technical move, right? And I'm going to just do this because I believe this is a descending channel that you see here. Okay. I believe that's what we're following right now. This pullback hasn't been if you look at the broad-based move from a Fibonacci standpoint, right, of this entire move, we're barely pulled back to the 38% retracement. So I'm a little skeptical that this is even going to complete now, this bear flag pattern. I'm going to leave it drawn like that, but we could end up getting the Sterling having a positive result following the 4th of July holiday and when the UK has their elections, the snap elections. So just keep that in mind. I'd be watching the sterling for a potential upside move this next week. All right, continuing on. So on Friday we have NFP and Canadian jobs. I already looked at the US dollar index. I think you guys are pretty clear with that. Now, as far as the dollar Canadian goes, it's been pretty impressive. You guys know I've been a little skeptical about being short Canadian dollars, meaning being long dollar Canadian. But my colleague Ryan Littlestone, he had some bids to buy the dollar CAD on the spike lower. What was it, beginning of last week or the end of the following week? Anyway, he picked up some down here because he knows that the 136 is such key support. And if you look at this trend line, maybe that's really what's holding us right now. Watch the dollar CAD. My skepticism comes from the lopsided positioning in Canadian shorts, meaning a lot of people are expecting the dollar CAD to go to 140. So if the Canadian jobs report comes in stronger than expected, we might actually see a move back down to 136. And I will say this: a break below 135, 135 to 130. 135.90, excuse me, to 136 would be very bearish. But from here, which direction we go, I'm really unsure. And I think the Canadian jobs report might give us a little bit better idea of what is happening. Okay. Now, continuing on for the through currencies, let's talk about gold, because gold has been really just range bound. But you notice, and let me get over to the gold market, we are still very, very close to really key support. And I think it needs to be noted that we're making lower highs. So you can see how, and I'll just highlight it here. We're making lower highs, which is not a bullish sign if you're a gold bull. So just keep that one in mind. Obviously, critical support comes in at 2280, 2275, somewhere around there. Copper remains at very critical support here. And I think we need to watch it, because in the event that copper breaks down below these lows right here at 430, we start breaking below that. I don't think you want to be long Australian dollars. That's something to be thinking about as well. The other thing I wanted to talk about today was crude oil. We've mentioned crude a couple of different times, but crude oil remains really pretty bullish while it's above 80. We were stalling around the 618 retracement. We talked about the 618 retracement capping us last week. We made a brief break above and we're back below, but notice how sellers aren't really stepping in. Because we're not seeing any aggressive selling, I'm not counting that as a false breakout. At this point in time, it still looks very constructive, and it still looks like we could trade up towards $84, $85 while we're above 80. So, crude still looks, like I said, constructive at this point in time if for bulls. One of the other things I should mention is the bond market. We talked about it in almost ad nauseum last week, I believe, but let's pull up find the 10-year here. I just realized I've had myself on video this entire time, and that was not intentional. So did you guys catch me picking my nose at some point? I might have. I'm joking. Okay. Anyway, so we talked about this really key resistance here around 111. Obviously, if the 10-year ever breaks that, it's going to be really bullish. I kind of changed my tune earlier this week. If you're reading the Forex Analytics analysis, which, by the way, you guys know, when you're using Forex Analytics, we do analysis on 30 different instruments, not just currencies. There's the bond market, there's the German DAX, here's the 10-year. You can see how I've kind of talked about it being in a bull flag pattern. We have cryptos, we have precious metals, a lot of cross rates. Obviously, there's 30 different instruments that are updated throughout the course of the week all the time. So my analysis on the 10-year is pretty well known at this point, that we're trying to develop some sort of bull flag pattern going into this resistance, which makes sense. We are holding above the 200 DMA. It looks still very constructive, and I think we need to pay attention to that if it breaks out, because a lot of people are getting used to the idea over the last couple of years. Bond market goes down, yields go up, I'm going to buy the dollar. So if the bond market goes higher, yields are going to come down, I should be selling dollars. That isn't necessarily the case. You have to understand why the bond market's going up. If the bond market, like I just happen to be looking at the 10-year, but if you're looking at the 5-year notes or 2-year notes or the 30-year bonds, whatever you're looking at, if the bond market starts to catch a bid and stocks start to go down, that means that the bond market's going up from a safety point of view and maybe a little bit of a position squeeze. And if that's the case, the dollar doesn't necessarily have to go down. So just because we are correlated right now, correlations do not create causation, but whatever that saying is, just remember that correlations do shift, and it just depends why things are happening, not if it's happening. Why is it happening? All right, so just focus on your charts. You break above 111 in the 10-year, go look at the dollar and see how it's responding, and if it's not going down, you probably now know the reason why. Okay, continuing on. Actually, at this point in time, I want to bring in Nick from Trading Analytix. He's going to cover the S&P, and then I want to talk, and he's covering a few other individual stocks as well. Make sure you tell Nick hello. Comment down in the section below when Nick does his analysis. But more importantly, when he's finished, I am actually going to come back and talk a little bit about the S&P because I think it's something might be developing here. So enjoy your time with Nick. I'll see you back here in just a couple of minutes.
Hello everybody, this is Nick Groves, your host here with Trading Analytix, and today let's talk a little bit about what's going on in equities. So, little bit of a bearish day today. The S&P down 0.44%, the NASDAQ down 0.56%. I think what's interesting about today is that when you take a look at the weekly chart, and it's Friday, 5/20, we just closed, we are printing a gravestone doji on the weekly candle for the S&P. So, will it come under pressure? I think it's possible, and let's just talk about in the event it does. So if it's going to pull back, I'm looking at this trend line support. It's probably going to come in around 5,400 by the time we get there, but 5,400 really seems to be the big level. Below there, I'm looking at the 38.2 at 5,307. Now, there's also some previous resistance there, and it acted as support in June, so I think that 5,300, 5,320, that should offer some good support in the event that we get down there. Now, the NASDAQ. I'm also looking, I saw today that the NASDAQ broke this formation. I gave a heads up on our Twitter, Trading Analytix. Give us a follow if you'd like. But for me, if we pull back in the NASDAQ, I'm looking at really closer towards 19,200 or so. I know that's also right near the 38.2 of this recent move. So it's getting interesting because we did have a lower high today, which could mean a lower low. So we're just going to have to be on the lookout to see what happens. But let's talk a little bit about big tech. So what I noticed today that was interesting was that in Facebook, you have a bearish engulfing. You also have a false breakout now of this little formation, this channel, and it closed below and it closed on its bum. So when it closes like that on a Friday, usually it opens down. So just be aware of that. I also noticed on Google that Google had a pretty bearish day as well, down 1.7%, but we do have some support coming in, so we have a little bit of this pennant at the moment. That comes in right at 181. Google did come up and tag the 161% extension, so it is kind of due for a little bit of a pullback, but in the event it does create a false breakout, that should lead to a breakdown at 177, so be watching support there. Although that this market could be on the brink of rolling over a little bit, I think it's just important to note, this is the Mag 7 composite. It's still trekking higher. This is a very strong instrument, or pool of instruments, really. And, we'd have to drop substantially before I could begin to call this market actually bearish. Taking a look at the SMH, the Semiconductors Index, it's still holding trendline support. And I know that NVIDIA has been a topic of the town. We posted on our Twitter that we felt, support would be right around here in NVIDIA, and sure enough, we got a nice little 8% bounce. But for now, we're just consolidating, and I think that's really what we're going to be doing in NVIDIA moving forward. You have some other areas of the market like XLY, consumer discretionary, although it's down 1.1%, still in a very strong ascending channel. If you like some of these charts that I'm showing you, please give us a follow on Twitter, and I'm going to pass it on back to Blake. So thanks so much, and you guys have a great weekend.
All right, thank you, Nick. I really appreciate you chiming in and getting us up to speed on how you're viewing the markets. Nick does such great analysis. Make sure you're following him on Twitter. You're following his YouTube channel. You can get to those links down below. Nick has been a wonderful addition to the Forex Analytics community. So thank you very much, Nick. Really appreciate you. And I know everybody else here does as well. So like I promised, I wanted to show you something about the S&P that I think is kind of critical here, is that we're stalling at that 161% extension. Obviously, Nick's mentioning the same levels, and we're watching this here. Let's get rid of this that zone there. We're at the 161% extension. Potentially, some big resistance as a double top might form, but you can't really get worried about the stock market unless you get back below this green line, which you notice coincides with the 50 DMA. So yes, we could have a double top. Yes, we could break channel support. Yes, we could test 5,300. It's really below 5,300 or the 50 DMA, which you can see right here. Let me move this. You can see right there, which is providing ample support for the market. And that, I think, is from a trend following perspective, that would freak some longs out. Now, are we going to get back below that this week? There's a lot of risk that could happen this week between these European elections, between what's happening with the jobs report, what's happening with all the economic data that's being released. It's a risk. Is it going to happen? Prove it. For me to get bearish equities, I have to see proof, because as of right now, the markets remain extremely bullish in breakout territory. So will there be a top? Maybe, but as far as I'm concerned, prove it to me. Prove it to us here trading the markets versus trying to assume that a top is being formed. All right, a couple other things I wanted to mention regarding crypto. Take a look at Bitcoin. Bitcoin continues to just trade around 60,000. It looks very, very heavy. Now, as you all know, I think I have it drawn over here. As you all know, we completed this double top range extension. That happened early last week. I made a big stink about it because, if you follow me on social media, so you guys should have known that was happening. But really, at this stage in the game, you got to be watching this 200 DMA, because what happens if the 200 DMA breaks? Well, not only is it going to freak maybe some traders out, but more importantly, it's going to freak some institutional traders out. Now, as I've mentioned to you regarding this bull market, I believe the canary in the coal mine is, instruments like Bitcoin, which are late stage institutional vehicles. Bitcoin has very much been woven into the fabric of Wall Street over the last several years. It's not going anywhere. But also, there's been a lot of institutional money in recent years plowing into cryptos for good reasons, ETFs and, diversification and, taking away from some of their gold, positioning into crypto, so on and so forth. But if you start to see crypto roll over, you start to see Bitcoin break below the 200 DMA, is that a canary in the coal mine where investors are now starting to pull the plug on some of their last investments that they might have just put in? So we call it LIFO, last in, first out. So last in might have been my big Bitcoin position in this ETF, but it's starting to roll over, and I think I need to take some things off the table, and I still want to hold on to my Apple and my Microsoft. So maybe I'll just get rid of my Bitcoin ETFs. See, the LIFO, last in, first out, I think is going to be an issue, and that's why I believe we need to be watching crypto as that canary in the coal mine in the event we start breaking down. So I'll say it one last time, very slowly. The 200 DMA is extremely important, and it should be watched carefully in the days and weeks ahead. Okay, this is the time of the video where I'm going to review last week's setups, and then I'm going to give you my top 3 setups of this week, even though it's a lightened week. So let's talk about the first setup. Euro-dollar, breakdown into elections and how to play. That was my setup number 1. So just so you guys know, one of the benefits of being in the Forex Analytics community is you can be in the chat rooms. You got the trades room, and you can see me taking off my euro dollar shorts as we were heading into the weekend, my euro Swiss shorts, because I just wanted to reduce risk. I thought the euro would be a little bit weaker going into the French elections. I think you can see the market's really not too worried. So I did play the euro to the short side. I ended up making less than 20 pips, so nothing to really write home about. But it didn't break down. Obviously, I tried to play it from the resistance around the 107.40 level. So you call it a scratch. Maybe you can call it a win. If you played it the way that I played it, maybe some of you might be in it, which would be a little wild, because one of the things that I really wanted to see happen this last week was I wanted to see if the euro would crack ahead of the elections, and it didn't. So the euro is basically on standby, waiting for what happens over the weekend. So you can call it whatever we want. You can call it a scratch if you want, even though I made a little bit of money on it. Let's just call it a scratch. So the dollar yen, we have to hold above 160, hold below 160. It's key, and only to trade it short on a break back below 157.70. Well, unfortunately, we didn't hold below 160, and we just moved above 160. So it never turned around for us to get short below here. So that never happened, unfortunately. So I'm going to call it a scratch because 160 didn't hold, and I was looking for a reversal back below 157.70. So that one's just didn't happen. Euro, called a scratch. Dollar yen, didn't happen. And then the third one, sell cable into 126.80. So if you sold sterling into 126.80 this week, this is an hourly chart, so you can see you had ample opportunity and ample time to get a short sterling off. And did you make money? I think you did, and it worked really well. So one win, one didn't happen, and one you can call it a scratch. Okay, not bad for last week's setups. Let's go into this week's setups. So this week, I believe that God is going to come back and give us scorched earth this week. I'm just kidding. I'm joking. I'm actually trying to get to the right chart, and I just was using filler to say something. I'm totally joking. All right, so the pound. Yeah, all right. So the pound Aussie. Pound Aussie, number one. We don't talk and haven't talked about this one a lot, but I want to do a couple of things with you. So pound Aussie. You can obviously see that this is really critical support. It's at 189. So because we have the UK elections, the snap elections on Thursday, and I believe the Aussie is at risk due to the way copper is reacting, I think being long pound Aussie while it's above 189 is going to be a play that I'm going to be focused on. All right, right there. That's your setup number one. Setup number two, speaking of the Aussie, is shorting the Aussie dollar on a break below. So let me delete some of this stuff below the 50 DMA and add on a break below 65.80. So in other words, this 50 DMA, I believe, is going to be very important for bulls. And if we break below it, I'm looking to take a little bit of a short, and I'm looking to add to it on a break below the 38% retracement. So that's trade setup number dos. Number three, going to be looking to short gold on a break only a break below 27.70. And the reason why is because I think you have very, very good. Well, first of all, on a breakdown, you would have great risk reward because your target is going to be down here towards 21.50. This would be a simple range extension, right? But I think the reason why I say I think there's a good chance of this happening is what I told you a little bit earlier. You have very, very, you have lower highs building into really key support. So a breakdown would be, would take us, back down towards these levels, right? Now, on a breakdown like that below 22.70, I think your risk is very manageable. And that's important because You just can't assume you're going to make money when you're trading. You always have to look at what your downside risk is. So a break below 2770, maybe your stops are back above 2300 in case you get a false breakdown. You know, you might get some John G's selling, you know, gold on the way down, and then you get squeezed, right? So, you know, 2300 is going to be probably a decent level to know where your risk is at, just in case you get a false breakdown. But I believe gold is acting very poorly right now. And for those of you that listen to our daily shows on the F.A.C.E show, you know, one of my big hangups with gold at the moment, near term, is there's so much retail buying. I have had people come out of the woodwork, texting me, calling me, buying gold at Costco, asking who I buy physical gold from. And these are people that normally aren't in the markets. And that anecdotal evidence suggests that near term, gold might come down. Now, longer term, I think if gold came down towards 2150, it's probably going to be a wonderful play back to the upside, you know, for those of you looking for better places to be on the long side. But that's how I'm viewing gold. And so that is going to be your third setup of the week. So let me just say this once again. For those of you that maybe missed it a little bit earlier, maybe you fast forwarded through this video right through the chapters just to get to, you know, the top three setups of the week. Just remember that this month, the month of July, if you take a trader funding program assessment, you will get a one-on-one consultation with me in the month of July. I'll reach out to you via email. I'll set up a time, a meeting. We get to meet over Zoom, and we get to talk about all the tools that are available to you. Some of the, you know, what I found has worked for me in passing assessments in the past. And but the most important thing for me, though, in this whole, you know, making sure that I spend time with you, not only is that, but is showing you the tools that you have available. I've been surprised at how many people that take the trader funding program that don't know that they have access to Forex analytics for a certain period of time. Why not use that to your benefit and be able to leverage being able to talk to myself and other analysts in the Forex analytics community at will? So take advantage of that. All right, guys and gals, thank you so much for listening in. For those of you that are celebrating the 4th of July holiday, happy Independence Day to you, or happy 4th of July. And I will catch you on the F.A.C.E show on Monday morning. My name is Blake Morrow with Forex Analytics. Have a wonderful remainder of your weekend. And thank you for listening in. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.